Hey, good afternoon. Today is June 15th, 2022. We're looking at a 2000 tick chart for the E-mini S&P 500 futures market. We got a 21 EMA here in blue, 9 EMA here in cyan, and a 200 EMA in magenta. We additionally have a MACD indicator down here at the bottom, but we primarily focus on using technical analysis, price action, and overall market context in order to place our trades. Take a second, real quick, like the video, subscribe to the channel, turn on post notifications so you know exactly when I post this content. And as we do in this channel, mark level of resistance up here at overnight highs, level of support down here at overnight lows. Pre-market price action showing somewhat of an uptrend. And so that's initially what I had. Let's get started with the day and I'll show you the trades that I saw potential in. Now, if you manage to spot, you have 1, 2, 3, nearly 4 touches here of this bottom channel. Kind of a bigger channel at play, but with prices continuing to move up, I had this drawn in. Now, there was a few things I was looking at. While we did have this big channel drawn in, we also can't forget our level of resistance here at the overnight highs. And it looked like prices were trying to fight this level up here. Now, I don't have it drawn in, but we do have somewhat of a range at play as the 9 EMA, 21 EMA are somewhat flattening out. Prices are oscillating up and down above the moving averages. You get this nice signal bar off the support level of this range as well as the bottom level of this channel. Prices in this segment are moving in a range. And so according to those price action rules, we want to buy low and sell high. Now, if you enter this trade one tick above the signal bar, you're going to get a nice quick easy scalp as prices are looking to reach the top level of this trading range. I did mark it aggressive because we have a close below this 21 EMA. I guess it doesn't matter too much when we're in a range, but it's still something I'm not entirely used to. So it's just something I need to keep practicing on, but that's what I saw. So what I did notice was this bullish bias. We do have this bullish imbalance as prices continue to make higher highs up here and higher lows down at the bottom. So when we get this higher low above EMA, prices are congested here. I marked it as aggressive. I actually don't really like it now looking at it. I didn't take that trade, but it did shoot up fairly quickly. We had a little bit of room back up to the resistance level of this trading range. So that's why I had marked it initially, but it's really not the best place to take a trade like that. Now, as prices continue to move up, we have the separation between the 9 and 21 EMA. We're looking for reasons to go long. Prices are still in an uptrend here, so looking to catch stops to go long. Restarting the count down here at the bottom where we have key entry point. Prices come up and down for a first entry short. Prices continue up looking for a second entry short to trigger. Once it triggers, you would put your stop limit order one tick above the signal bar, but unfortunately this bar closes at or below this 9 EMA. So when that happens, I'm removing the order. I'm not going to keep my order in the market. And that's a rule I have in place because as you see, if you keep your order one tick above the signal bar and you're looking to catch stops, you're going to wait it out, wait it out. Now you're in this trade and then prices reverse on you and you get stopped out. So that's a prime example. You want to make sure that you are following the rules. And even if you didn't pull your order when prices pulled below this 9 EMA, we weren't filled by the third bar. By this point, we have 3-bar overlap. Remove your order from the market. Don't enter that trade. Now, as prices continue to chop along here, we're continuing to make higher highs and higher lows above this 921 EMA. Prices come back down to test the 21 EMA before pushing back up. We get this nice higher low opportunity. You see this low is higher than this one. We are in an uptrend. Nice signal bar. I marked it as a confident trade, but I'd probably even argue it could be aggressive just because of the size of the signal bar here. You're risky. The bar size is 19 ticks, so you could potentially be risking a lot. So maybe that's more of an aggressive one. Now, as prices continue up, I did see somewhat of a separation between 921 EMA. MACD down here is about to cross over into bullish momentum. I was looking to catch stops here. We had the new low down here as prices came up and down for a first entry short. Prices came up, down, looking for a second entry short to trigger. There's a second entry short trigger. Prices hold at 21 and 9 EMA. My entry order is going one tick above the signal bar here. And as prices come through, you're in, and I don't think you're out of the trade yet, but as prices continue up, then you'd be out of the trade. But your stop loss is going to go one tick below this signal bar right here. So if your stop loss is one tick below, you just have to sit through it a little bit, but then prices move exactly where we want them to go. Again, in a bullish bias, buying would be in our best interest because that's just most likely where prices are going to go. Now, at the time, I didn't have this downtrend at play. So if we just move it out of the way for a second, this is kind of what you're looking at. We still have this uptrend. Prices are still making higher highs and higher lows. You get this nice bullish bar right off the support level of this channel that we have in play. But we did get a close below this 21.9 EMA. I marked it as aggressive because MACD is additionally showing bearish momentum. 9 EMA is about to cross over this 21 EMA. You got to be careful about going along here. If you enter one tick above the signal bar, you would have been in this trade. Prices push up from 2.0 up to 4.0, exactly 2 points before prices reverse. Now, I saw this trade. I didn't take it, but I saw this one and I did take it. And unfortunately, I lost. But that is what I was looking at the moment. I guess I could have noticed this uptrend was most likely losing momentum. Prices are not reaching the opposite end of this channel here. But that's just me being fully transparent. There's a trade I lost. Now, as prices continue on, we get a little bit of congestion. Prices fall and another level of congestion, a lot of overlapping bars as prices are trying to figure out what to do. Additionally, we have this 200 EMA that's coming up, so prices are coming right to it. Once I started to get bounces off this 21 EMA, that's where I drew this bigger channel at play, and prices held fairly neatly. Little bit of an overshoot here as prices push back up. We get a break, and now we're looking for a new low off of this moving channel that's moving down. Prices do congest for just a little bit before they press down farther, and we get a new low. We get all these overlapping bars, a lot of congestion. So I'm not looking to go short anymore at this point. I'd either want to see prices continue to push down and prove that they're going to continue to go down, or I'm going to look for prices to push back above the EMA and for them to hold as prices push back up. Now, there is a lot of price action going on here, but you got to be very careful about taking trades here. We are in somewhat of a trading range, so it's better we use trading range rules. You don't want to mark this as a new low, first entry short, second entry short, and then take a failure trying to go long. It's a little bit too early. 9 EMA hasn't quite crossed over this 21 EMA here in blue, a little bit hard to see, but that's really what we're waiting for. So don't look to catch stops, focus on trading range rules. But you also got to be hesitant about going short because we just had a break move to a new low. So really, if you're going to be taking any trades in here, you'd want to be taking longs off the bottom level of this range. So I didn't mark this one, but you could potentially take a long opportunity here. Prices tried pushing lower, nice bearish bar, and then prices reversed, strong bullish bar here. You could enter one tick above. You have plenty of room back to the opposite end of the range. With prices congesting here, you got a lot of volume in this area. Prices could come back up. So I didn't mark it, but that's what you'd want to be looking for. Now, as prices continue on here, I wasn't interested in going long above this bullish bar. I just felt it was a little bit too risky. Prices looked to be congesting a little bit. At the time, I didn't have this bigger channel at play. I just had this short one. We had a break looking for a new high. Kind of hesitated on this one, but then when I saw this doji bar kind of form, prices tried pushing down and then finished up high, closed above EMA. Only hesitancy is 200 EMA could hold prices too, but we just had a break new low. I was anticipating prices to move back up, maybe to test the resistance level of this channel. So you enter one tick above that signal bar and you would have been in and out for a scalp. Once prices held here, I was no longer looking at this smaller channel. I had this bigger channel at play, and now prices are coming down. Another higher low opportunity off the bottom level of this channel, but I'm marking it aggressive because you have 3 exponential moving averages that are all within proximity of each other. So prices really could go up, they could go down. It's a bit risky, but if I'm in this uptrend after this downtrend had played out, nice higher low opportunity, another confirmation of this channel, I thought it was worth the risk. Enter one tick above the signal bar. Prices move up, stop loss is going one tick below the signal bar, and prices would have chopped up. You would have been in and out for the scalp. Prices do make it to the opposite end of this channel here, so we're showing a healthy uptrend. We do have this new high here as prices come down, first entry long, and as prices come down, looking for a second entry long opportunity off this 21 EMA, key entry point opportunities, but we don't get that. This signal bar is a little bit too far from the EMA, and so there's not another chance to go long here. Once we reach the top level of this resistance level of these overnight highs that we marked earlier in the morning, prices begin to push strongly down below EMA. 9 EMA crosses over this 21 EMA here. Restarting the count up here at the top, prices come down looking for a first entry long, and we get one. Prices come down up for a second entry long opportunity right here. Look at the MACD. MACD is showing bearish momentum. This is a perfect opportunity to catch stops. You have plenty of people that are trying to go long here. Maybe they're anticipating we had this uptrend. We have a break looking for a new high. But with the contrast, the difference, the separation between the 9 and 21 EMA here, bearish momentum, coming off the resistance level of overnight highs, this is a risk worth taking. Enter one tick below the signal bar here as prices come down in the next bar. You'd flush down for that trade and potentially a runner as prices continue down. Now we do have a channel at play here with a break, potentially looking for a new low. So I am looking to short. I don't have it drawn, but we do have a short-term uptrend moving up with the break now looking for a new high of the short-term trend. We have a new low here as prices come up. First entry short. Prices come all the way up to the EMA. Nice bearish pin bar really as prices try pushing back up and then come down and close. Second entry short opportunity. You can enter one tick below that signal bar. Your stop loss is going one tick above that signal bar, and you had to wait just a little bit, but prices do push down for a scalp before pushing up. Now, I haven't been taking second entry longs or second entry shorts as much. I've been really focusing on catching stops and higher low opportunities, but that's really what I saw. As prices continue up, I'm not looking to trade anymore. We do have news coming out at 1 o'clock Central Time, so I think the market is just fairly slow, waiting for whatever news the Feds are going to drop on us. But anyway, nice quick video for you guys today. I just want to get straight into the point. Those are some of the trades that I saw for the day. There were definitely some opportunities to make money, but then also opportunities to lose money. You can easily get trapped up in this congestion if you're not identifying it right away. So just continue to train your eyes, continue to review your charts afterwards, continue to consume content, get immersed in this stuff. That's what's going to get you better at it. But anyway, leave a comment down below. Let me know what trades you took today. Let me know, did you make money today? Did you lose money today? I read and reply to all comments, so let me know what you think. Until next time, strive for excellence in all that you do, and thanks for watching.